Yo, 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 yo. What's going on, everybody? How y'all doing this evening? Sorry, man. I just got up about 5 minutes ago. 5 minutes ago. I figured out on this Discord before when I was like, I can't see the names. Well, Marco gone now. But how I can see the name now, Marco, I can see the whole name. It had something turned on called streamer mode. Whenever I open up my
here, big spider.
what's going on, Marco? It had something called streamer mode on. That's why whenever I was streaming, I couldn't see the names. And then I just happened to click turn streamer mode off and I could see the names. I was like, what in the world? Good evening, good evening, good evening, everybody. I'm putting on my headphones, so if anybody want to come in to the Discord and talk, ask a question, it won't echo. We're going to go ahead and get right into it, man. I know y'all probably want to go trick or treat. I just woke up a little bit ago. So I jolly pause for my tardiness. I see Deborah up. I see Here to Learn and Share up in here. I see Deborah up in here. Marco had popped into the Discord for a second. Marco up in here. Good evening, everybody. If this is first time tuning in to Tim's Tidbits, allow me to apologize for being tardy, but also say welcome. Can y'all hear me? Make sure I'm not muted. Y'all hear me, right? Okay, let me see here. Okay, it don't look like I'm muted. All right. Yes, okay, thank you. Thank you. If you're first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If by some slither of my huge imagination you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's a big spot if you don't hablo Espanol. And you are now in tune to another episode of the Intra-Day Price Action Recap. Yeah, man. Let's jump right into it, man. Let's jump right into it. We got a couple people watching, so we're going to go ahead and get into it. I'm not going to waste a whole lot of time. Like I say, I know y'all probably want to go trick or treat and smell some feet and find you something good to eat. So we're going to go ahead and get right into it. Whoa, what's up, Lump? What's up, FC? What's going on, y'all? Let's jump over here to the split screen. Like I said, I am in the Discord. Speaking of the Discord, I want to shout out Dawn. That's a new member to the Discord. Signed up for the mentorship. Dawn was hanging out with us last night. If you're a mentee, hey, you know we went crazy last night. Shout out to Kashaya for pulling up with the hard-hitting questions. I think we got some phenomenal information that was covered last night on the homework review. Shout out Here Learn and Share said and did. Shout out Vernon. I think it's Vernon. Signed up for the mentorship. Shout out I think the name was Jim Big Bird. Jim Big Bird. I think they might have signed up with Black Spider. Um, and you know what? I was gonna record it last night. Um, I was going to record it last night, and I had already closed stream. I closed Streamlabs, and so when we got ready to start talking, I went to open Streamlabs back up to record. And now, since they did an update with Streamlabs, every time I open it, I have to go through this sign-in process, and I got to go through like 5 different pages just to sign in. I don't know what they did on this stupid update, but now I got to go through this sign-in process every time I open it. And I was like, you know what? I'm not fun to go through this. We just fun to answer these questions. But again, you know, y'all, if y'all want to record the screen and share the videos with your fellow mentees, I encourage that. I had my volume turned down in my headphones. Make sure I turn it back up. All right, so Jim Big Bird signed up as a Black Spider, and yeah, yeah, Dunn, Vernon, Mentorship, and Jim Big Bird signed up Black Spider. Right? Welcome, welcome, welcome to the gang. Welcome to the gang. All right. Damn. What? What did I miss? What? What's up, Tish? Yeah, man, stuff. What's up, Tish? It's all right. Stacks on stacks. You know what I'm saying? We talk about this. It's crazy. We talk about the same stuff all the time, but I guess sometimes when we talk about it, we just talk about it in a different way that just make it like tasty. All right, let's get right into it, man. We let me mark out this New Day opening gap real quick since we here. Since we over here, let me go ahead and mark out this New Day opening gap. We closed there. We opened there. Okay, for anybody who don't know what a New Day opening gap is, New Day opening gap is the closing price at $4.59. The difference between the closing price at $4.59 and the opening price at 6 o'clock. That's what a New Day opening gap is, right? And the new week opening gap is the difference between the closing price on Friday at $4.59 and the opening price on Sunday at 6 o'clock. And then the new week opening gap, the day is always going to be the next day because it's 6 o'clock p.m. and that starts the futures trading day. So it's like today is the 31st, but it's 6 o'clock p.m. But this is for the November 1st trading day. Right, so you're gonna date it for the next day, November 1st, and this was a bullish New Day opening gap. Yes, all right. So now got that marked there. Now there's one less thing. That's one thing I don't have to do later. Now let's go. Let's go. I'm gonna just go into the 15-minute chart. All right, squanch it up. Yes, that was a bear's day right there. Okay, see here, I got the New Day opening gap for the 31st. That's what we opened up today, right? Then as you notice, it was a trend day to the downside. We had a trend day to the downside. Um, I didn't get an opportunity to do. Um, I didn't get an opportunity to do no trading today because, as you see, it was just a drop. You know what I'm saying? We had a drop and then a whole bunch of high resistance for the rest of the day, right? Okay, here at 9:30, right here on this 9:30 candle, price dropped, right, all the way down to the CE of that wick, and then we had this retracement back up into this 15-minute fair value gap right there. In hindsight, that was the move to participate coming down to this new week opening gap that I had marked. In hindsight, that was the move. But when I was in, look at this, right? So this retracement started at 10:15 and it ended with the 11:45 candle, right? So that's an hour and a half. You know what I'm saying? That's an hour and a half. So imagine an hour and a half. You can already imagine what price action was looking like. You know what I'm saying? It wasn't looking like, oh, let me jump in. You see what I'm saying? So it was like a drop, and then it was a bunch of high resistance. So nothing really set up that piqued my interest. And then the afternoon session was the same thing. Nothing set up that piqued my interest. So we're going to go in and look at the thought process of what was marked out based off of what are going on. So let's come over here. This is the 9:30 open. So we're gonna knock that off there, right? So this is when at 9:30. This is when price get. This is when the New York starting to go, right? And as you see here, just with it squanched up, I know y'all probably can't tell what this stuff is. This is the new one, so I'm gonna hide this for now. I don't need this. Right, that's the new one, so I'm gonna hide this for now. Don't need that. All right, and as y'all see, this is what I got marked on the chart, right? This is the new day opening gap from today, right? Got the new day opening gap from today. All right, I'm trying to make everything so that y'all can see exactly what that's the previous daily high, previous daily low. I'm not gonna make that big, right? This right here is our midnight open. This right here is our 8:30 open. That's a new day opening gap. All right, that's a new day opening gap. All right. So, all right, we got CE of a daily wick. We got a prior week's low of the 21st. I don't know if y'all can see that all that good because those right there be gray. Okay. Those be gray. Make it a little thicker for y'all so y'all can see it. And then we got a new week opening gap here from the 23rd of September. The week of the 23rd of September. And then we got another prior week low right there from the 7th. All right, make that a little thicker. Okay. All right. These are all the PD arrays that I put on the chart right now. Looking at the 15-minute, all right, you can see, and the reason why I know this is a prior week low and I know this is a prior week low is because looking at the weekly chart before price starts, when you're in playback mode, it shows you the entire candle, right? Whatever time frame that is. So, you know what I'm saying? It looks like a hindsight picking targets, but I want to walk through the reason why I picked these. But let's do this right here. Let's go back to 15-minute, right? And I'm going to put a line on the chart of where price is at the 9:30 open, right? So that line right there represents where price is at the open, and we're going to make it orange for open, right? We're making it orange for open. Okay, now class participation time. Who's in here? Who's in the chat? Who's in the chat? Everybody that's still in the chat, put a 1 in the chat. And I'm going to pick somebody to pull up in the Discord to talk. All right. I'm going to pick 2 people. We got Marco, put a 1 in the chat. Marco, pop in the Discord. Who else still in here? Tish, pull up in the Discord. Lump, pull up in the Discord. Y'all 3 pull up in the Discord. And everybody else who in the Discord, y'all pull up in the Discord. We finna do some class participation time. All right, I'm in the voice. Okay, that, now going back to the 15-minute chart. Uh-oh. What did I do? Did I do something? I hit 15. Mic not working in my Discord. Not sure what's going on. Somebody, Marco said his mic ain't working. Somebody say something.
Can you hear me?
Yeah, I hear you. Okay, that's you. Are you on a Samsung, Marco? You probably on the Samsung. Okay, let me go to 15-minute. Okay, I am on 15-minute. Oh, I got to go to weekly. That's what I'm doing. Okay, so on a PC, and you say your mic not working. I heard you earlier when you had spoke to me, when you came in and said, "What's up, Aranya Grande," or whatever you said. I heard you earlier. What's up, Tish? All right, here we go.
Hello, sir.
How you doing? Looking here, right? This is where price was at 9:30, right? Let's mark that out. 9:30 open, right? So if this is where price is at 9:30, that means this does not exist. All of this red candle down to here, down to that wick, that don't exist. This is where price is at 9:30. Now, looking at the PD arrays, I have marked out, right? You see I got this weekly low there marked out. Okay. Got that weekly low marked out. I got that weekly low marked out. I have this new week opening gap marked out. And then as you see, there is a consequent encroachment of a daily candle right there. And if we go to the daily time frame, 1 day, right? That daily candle right there, right? So now looking at the daily time frame, okay, y'all got a good picture of the daily time frame in your head right there. And then looking at the weekly time frame, right? Why did I pick those PD arrays to mark out for potential draws, if you will, right? Who want to take a stab at it? Nobody?
You say you want to know why you picked those PD arrays
Yeah.
to try to get it.
Yeah. Yeah.
I guess
Looking at
because price stayed within that range. It didn't leave that range.
this is where price is here. Like this don't exist. That candle
Oh,
right
okay,
there
okay,
don't
okay,
exist.
okay.
Right? We're here. This is where price is.
Yeah.
Right? So I'm just showing you what the week, like what I picked. Like if I go back to the 15-minute chart, right? This is what price looked like. Right? And put this up here. Right? So this is what price looked like at that time. See that big drop down that don't exist.
Yeah.
Right? So this is what price looked like at that time when I pick out this weekly low, this weekly low, this new week opening gap, this consequent encroachment
Oh,
of
okay.
that
Oh,
wick.
probably because it went up there and took out that high, and now it's gonna what you say? It looked like you consolidated it. Well, I'm sorry. You look like you left a balanced price range when it took out the high, and now you coming down to take out the lows.
Okay. Now say it in a simple way. What's the simplest way? What's the first thing we look at when we trying to figure out what's going on with price?
I guess we're looking for the draw and to
No.
see what it's trying to tell us where it want to go.
Yeah, we look for that, but what are we looking for? What's the first thing we looking for? Somebody help lump out, right?
All right.
What are we looking for? Huh?
We looking where you write it out
That
where
what I'm
we
saying.
are.
Where we are what? Where we are what?
Well, where we are in price. So
Yes.
what I was gonna say was you put those down there because you want to see how far we can go.
Okay, yeah, that's how far you go. But what's the first thing we look for? If we look for where we are in price, what are we trying to figure out? Where we are in the sense of what? Right?
Oh, in the models.
Yes. We want to see where we are in the model, right? If we're in a model, and if we're in a model, where are we in the model? Okay. So if we that's the first thing we trying to figure out. Right. So looking at price right now, right? Where are we? Right. This is where price opened up right here. This is the opening for this is what price looks like right now at the 9:30 open. So where are we in price?
On the right side, and that'll be the is that the sell side? The right? No, the right side is the buy side. I think.
We're on the right side of what?
The right side. The right side of the model.
Right. We're on the right side of what kind of model?
Oh, that's a sell
Mark,
model.
exactly. We're on the right side of a sell model, right?
Yeah, yeah.
Now, looking at web, like here we are right here, right? And we determine, okay, we on the right side of a sell model. Okay. Now, since we know we're on the right side of a sell model, is this model like a super clean looking model, or is it kind of disheveled? It ain't the cleanest, most perfect market maker sell model, or is it like uber clean and you can see it clear as day?
No, you can't see it clear as day. Well, you
Okay. Yeah. You
you can't.
always follow your first mind
Yeah,
because it's not super clear. It's not
yeah.
super clear.
That's
It ain't
true.
super clear, right? So it's not super clear. We on the right side of a sell model, right? Now we know we on the right side of the sell model. So now what do we want to do if we know we're on the right side of the sell model? What do we want to find, right? What do we
The
want to find?
manipulation.
No. What we know we're
Okay.
on the right side,
Okay.
right? Why do we say we look to see where we are in price? Because we trying to find out what?
Our entry.
Nuh-uh. We
What's
trying to
that?
find what?
The draw. Okay. Now
We
we're
trying
looking
to
for the
find the
draw.
draw. So if we looking for the draw, what's the draw in
The
a
draw is
sell?
bearish right now.
No, I'm saying what's the draw if you in a market maker sell model or a market maker buy model? What's the draw?
Is it
Somebody
the
help.
initial
Initial
consolidation?
consolidation. Yes, your initial consolidation is your draw if you in, and no matter if you're in a buy model or a sell model. So your initial
Okay.
consolidation is your draw, right?
Oh yeah,
You're,
yeah, yeah.
you're not saying I'm gonna get there today. You're not saying I'm gonna get there tomorrow. You're not saying I'm gonna get, you know what I'm saying? You're just saying, okay, I'm in a sell model, so I'm looking for my initial consolidation, right? So if price is right here, right, what would be what would you pick out to be the initial consolidation if price is here?
The the initial consolidation would be
What is
that
what's near what's near
9:30 open. That 9:30 open.
what's near what's marked what PD arrays that I got marked out on here, which one is near what you would consider to be the initial consolidation for this ugly market
Oh,
maker
okay.
sell model?
Are you talking about the new day open gap?
You say the new day open gap? Which new day open gap?
10:31. I'm looking at a 10:31 new day opening
All
gap.
right,
You
that's a
got on
new
there.
day open gap right there. So for a
Yeah.
market maker sell model, right, the draw is the niche consolidation. So what would be resting there in a market maker sell model? What are you trying to attack? Buy side or sell side?
I don't know which one.
Sell model, market maker sell model.
Okay. We trying to attack the sell side on the sell model.
Okay, so
All right.
if you're attacking the sell side, right? If you attack not the yeah, if you're attacking the sell side, then the draw ain't gonna be above you. The draw gonna be below you because you're drawing towards something, right? The buy
Okay.
model, you're drawing towards something. The sell model, you're drawing towards something. You see what I'm saying? You
Okay.
draw. That's what like you're if the model starts
Oh,
here,
okay, okay,
if the
okay. I
model
see it
starts
down
here,
there
you
at
see
the
what I'm,
9:21 new
you
week
say
opening gap.
you say new week opening gap
Yeah,
920.
that's
This
what it's gonna be.
923 right here.
Uh-huh.
Okay, so this consolidation over here.
Yeah.
All right, boom. Right. So in this ugly market maker model, right? Looking at
Mm-hmm.
this as the niche consolidation.
Yeah.
Okay. So if this is the niche consolidation, right? When I was on the weekly chart, right? When I was on the looking at the weekly chart, right? I'm looking at, let me go back to 15 minutes. Circle this real quick. Right.
What you gonna circle?
The niche consolidation.
Okay.
Right. So I'm gonna circle. Right. I'm gonna circle this. I'm gonna circle all this. I'm just circling everything there. Right. Cause we got a consolidation right there, but I'm just circling this because it's big and ugly. So I'm just looking at
Yeah.
this. You know what I'm saying? I'm just circling all this right here. Right. Now I'm gonna go back because I'm going to a weekly, and plus on the weekly, them little circles you can't see them, right? They just come out looking like a line like that right there. You see what I'm saying? So it just come out looking like a line. Okay, so when I zoom out to the weekly, now see that's what we circled it. Now let me get this out of the way, right? So when I zoom out to a weekly, right, and prices here and this don't exist. Let's do this real quick. All right, I zoom out to a weekly and prices here and all this doesn't exist, right? This is where the niche consolidation resides. I circled the niche consolidation over here, right? So
Yeah.
since I circled the niche consolidation over there, right? We price up here. So what rests beneath lows, right? What's up under lows?
The liquidity.
But what
I
kind of
don't know.
liquidity?
Sell.
Yes.
Yeah.
Yes,
This
we
the
got
sell
sell.
side, right?
Yeah, we got sell side liquidity resting up under lows, right? So if this is where my niche consolidation is, right? That right there is my draw on liquidity.
For the
That's just my draw on
previous
liquidity.
week low on
Yeah.
10.7.
Yes, this is my there right there. That's where Picasso lives if I'm in a sell model, right? If I'm in a sell model and this is my original consolidation over here, right? That's where my draw is, right? So that's why I pick that weekly low right there because that's the first low that we get to inside that consolidation that has not been touched yet. Because you can look and say, why you didn't pick that low right there, Tim? We already traded down below that low. You see what I'm saying? So I'm not looking at that low as a potential draw because I got untouched liquidity here. I got untouched liquidity there, right? So I pick this out as my draw. Boom. That's the first thing I marked. That's my draw on liquidity. Now that I got my draw on liquidity, because I know I'm in a market maker model, while I'm on this weekly time frame, what else do I have in between where price is right now at 9:30 in the morning, right here? This doesn't exist, okay? And the draw. What else do we have on the screen? Two of them marked for you already, right? We got two of them marked already, right? So
On the
what else?
PD
Yes.
array.
We on this weekly chart, on the weekly time frame, two of them marked for you already.
Bears gap. You got a bears gap.
Mhm.
I say you got a bears fair value gap in there.
Between here and here, right?
Oh,
What PD arrays rest in between where price is and the draw? What we looking for PD arrays in between where price is now and the draw on liquidity coming down, right? Right? It's two of them marked for you already, right?
You
And
got
then
consequent encroachment of the wick.
consequent encroachment of which wick?
That previous week, 1021.
This one here?
Mm-hmm.
Okay, yeah. Consequent encroachment of that wick. I didn't mark that out. I chose not to mark that out right there. Right? We got consequent encroachment of that wick there. I didn't mark that. That's good. Right? And then what else we got?
I don't know.
Right? So we got consequent encroachment of this wick. Right? Here.
Is that a volume imbalance? Do you consider those
Well, talk about here.
right here? Mm-hmm.
That
Yes.
right there. Yeah, that right there, that would be a volume imbalance or a new week opening gap, right? That'll be a new week opening gap
Oh,
right there. Because when you look at a volume imbalance, it on the daily and weekly chart, it's just a new week opening gap. So if I look here on 10-7, right, and I go to my gaps, right, and find 10-7 in here, new week opening gap, right, new week opening gap right there. Okay, there you go. Very good. We got a new week opening gap there, right? We got a new week opening gap. Earlier today, early this morning, I had this one on, but as the day went on, I took it off because it was in my way. But that's the only thing that I took off the chart. Everything else is the same. It was like too cluttered, right? So I did mark that one. I didn't mark the wick now. And if I come back here, right, to show you why I didn't mark the wick, right? That's why I didn't mark the wick, because we got a new week opening gap there and a consequent encroachment of a wick there. This right here in my mind is more of a draw than that consequent encroachment of that wick. You see what I'm saying? I got a new week opening gap and a low. So if I'm expecting this to be the draw, I'm not too concerned about consequent encroachment of this wick. You see what I'm saying? Because when I'm looking at discount wicks, right? When I'm looking at discount wicks, I'm looking at them to support price, right? When I'm marking them, I'm looking at them to support price, right? If I'm looking at premium wicks, if I'm marking them, I'm looking at them to resist price, right? And so if I'm looking at them to support price, and I'm short and it's going down, I'm looking at this as a potential spot to maybe trim something. Or if I'm bullish, I'm looking at this as a potential to look for some type of entry if we start to reverse there, right? So that's again, that's why I didn't mark that, because I got a draw there that I expected to come to, and also with the wicks, I'm looking forward to support the price, right? And since I got other, in my opinion, like more like stronger magnets there, like a liquidity pool and a new week opening gap, right? The draw of the discount wick, I ain't worrying about marking that out, right? And then only other one that's on there that I didn't mark is the consequent encroachment of this wick right there, right? So those are the PD arrays that's in between price, right? So we got that weekly low and that weekly low. So this is our draw, right? And these are the things that are in between price where, you know what I'm saying, price can draw to and we can look for some type of reactions off of them, right? And this low right here, right? That low right there, this is our draw. What type of liquidity will this be right here? This 1021 low, right? This is our draw. So this, matter of fact, all of this inside there, everything that's inside there, what type of, especially this low right here, what type of liquidity will this be right here? Internal or external?
Internal.
Yes, internal liquidity, right? Because this is the end of the run, right? That's the end of the run. So this right here is our external liquidity in reference to this market maker model that we're looking at, right? So this right here would be internal liquidity. Do we have to get there? No, we don't, but we know that's the draw because that's the start of the market maker model, and this is where the market maker model will end at if it reaches all the way down there. Okay, so that's why I picked out those PD arrays, right? And then if we go to the daily, right, on the daily time frame, right, you notice the only thing I marked out was the CE of this wick. Now, what did I just say about the consequent encroachment of the wicks, right? I'm looking at them to see if they support price, right? And I didn't mark them out on the weekly time frame, right? So, okay, Tim, why you marking it out on a daily time frame if you ain't marking them out on a weekly time frame, right? If we look here on the daily, right, what do we have right here? This is a daily what?
Swing low.
That's a daily low, right? But what is it also?
A previous week low.
It's a weekly low, so I don't have to mark it as a daily low because I already know that that's a higher time frame weekly low, so I don't have to mark that daily low right there, right? This is a daily low right here, but it's also what? A prior weekly low, so I don't have to mark that as a daily low, right? And then we have, if you look here, in between these two daily candles, yeah, that's a new day opening gap, but guess what? It's the new day opening gap of the weekend, so that's a weekly that's a new week opening gap, so I ain't got to say, oh, well, yeah, I got a daily. No, it's a weekly, right? I already got it marked. You see what I'm saying? And then we have that new day opening gap right there that's marked out, and then we got consequent encroachment of that wick, right? Why? Because these are the only daily PD arrays that I'm worried with marking because I already have everything else marked out on my higher time frame. I'm not coming in here trying to load up my daily with a bunch of PD arrays when I got a higher time frame PD array there, a higher time frame PD array there, a higher time frame PD array there. The only thing I want to mark is what's important on the daily. If this is my draw, right? This is unique. This is new, right? New day opening gap that we haven't traded down inside, right? Consequent encroachment of a wick that we haven't traded down inside, right? Everything else has been taken care of on the weekly, right? This is how you prevent from overloading your chart with a whole bunch of unnecessary stuff, and now you got your narrative in place from the higher time frame. You know where price is drawing to. You know your important PD arrays that's in between you and price. You know what I'm saying? These the important PD arrays in between you and price, right? And since this is your draw, right, what do you want to do? What do you want price to do with all of these PD arrays coming down towards your draw? You want price to do what? You want to see price do what? Use them as what?
What you say? Use them as what? Support or resistance? You mean?
Yes, since this is your draw and price is here, right? Remember, this don't exist, right? Price is there. This is your draw. You want to use all of these as what?
Support.
Flip it over. We're going down.
Okay, resistance then.
Okay, we want to use them all as resistance.
But I'm thinking if we use that resistance, it's gonna go back the other way, like resistance against us.
Yes. So in the sense of support and resistance, right? You want to use them as, see, I don't want to get people in the habit of saying you want to use them as, you want them to support your narrative. Right. You want them to support your narrative. But if your narrative is bearish, right, you want them to act as resistance. And why do you want them to act as resistance? Because we sell in a premium, right? So since you sell in a premium, you're expecting the price to go up against resistance and then come down. And if you buy in a discount, you want to come down to support and go up. Yeah. You see what I'm saying? So you want all of these PD arrays, since you're above price, they're discount PD arrays right now. So you want all of them to fail and then become resistance. Fail, resistance, fail, resistance, fail, resistance. You see what I'm saying? Coming down. Since you're above price, right, they're all discount PD arrays now. So you want them all to fail, then become resistance. Fail, become resistance. Fail, become resistance until you reach the end, or until price says, okay, I'm done. Now I'm going back up. You see what I'm saying? Now I'm going back up. Okay, so you want to use them as resistance. And I already answered the other part. Since you want to use them as resistance, we want them to fail.
Fail, then resist.
You want it to fail. You want all of them to fail and then become resistance. Okay. Tracking. Everybody tracking? Everybody tracking? All right. I'll take that as a yes. Right? Everybody got some kind of inkling of help when it comes to analyzing the time, the higher time frame. You find out where you are, then you look for your higher time frame PD arrays and trying to keep as little information, only keeping the important information on your charts. Everybody got that? Everybody clear on that? All right. If we trapping, say we trapping. Shout out Wall Street Trapper. Okay, let's go take today off. When I say today, I mean the calendar that started to print now. And then let's go over to our 9:30 time. Oh, no, we'll just leave it on, right? And so let's look at, now we got our PD arrays, and we're going to look at, this is price here from 9:30, right? And then once we look at the price from 9:30, we'll go back and look at the day as a whole. Well, let's just look at the day as a whole first, right? So this is the day as a whole right here. This is where price started at. We'll look at the day as a whole real quick, and then we'll go to 1 minute and look at the 9:30. We'll look at the 9:30 time frame on the 1 minute, right? So this is where we opened up here last night, right? We had a bearish new day opening gap. We opened up at 20,482 even, right? Price dropped down immediately into the prior day's low, right? We immediately dropped down, took out the prior day's low, right? Traded back up into this big SIBI here that we made, right? Failed to get back up to the new day opening gap, and then price sold off from roughly 9:15 up into 4:30 in the morning, right? Just a straight sell-off, just trend day to the downside from 9:15 up until 4:30 in the morning. That's going into the actual London session, right? This is where the London opened at. The London opened roughly in the same place as the New York Open. The New York Open 9:30 open was, let's put it right on the actual open, right? So the 9:30 open was 20,366 even, and the London Open was 20,359 and a quarter. So 3 ticks lower, right? The London Open was 3 ticks lower than the New York Open. I thought I used to have a thing that said London Open. I could have swore I had one that said London Open. Okay, so the London Open, New York Open, roughly in the same spot. Okay, so this was the London Open, right? And then we ended up at this New Day opening gap from 1024, which was last Thursday, right? So we came down to last Thursday's New Day opening gap, right? Making the London low, right? The London low here on this 430 candle, right, at 20,287, right? Price rallied back up, right, going into the 830 news embargo, right, failing to get to the midnight open price, right? We traded all the way back up into the wick of this this long wick on this up close candle right here that dropped down and create the low at 745, right? This would have been, that's not the Asian low, but when we first made that first little low at 745 there, we traded back up into that wick right there. After, you know, you can tell we ran some stops with that little long wick and then displaced back up and took out that high. We traded back up into that. That would be like a break-in market structure. That's the, I was trying to get my thoughts together right there. Traded back up into that break-in market structure right there. Failed to get to the midnight open, right? And then after the 830 news embargo, right, price just pretty much gave up the ghost and dropped all the way down until 10 a.m., dropping down below the consequent encroachment of the daily wick that we marked out. So we went down through the New Day opening gap, right, that we had marked out. We went down through the first new week opening gap, right, from 10.7, right? Let me put 10.7 on there so we can see that. Right, went down through the new week opening gap from 10.7, and then got down below the discount daily wick that we had marked, right? Dropped down below that, right? Price just kept dropping all the way through the first half of the 950 to 1010 macro, right? From 830 all the way through the first half of the 950 to 1010 macro. Retrace back up to the low of the 10.7 new week opening gap, right? And then price dropped back down to that first prior week low, that first internal sell side liquidity, right? That first internal sell side liquidity that we was watching, price dropped down to that. And then in there, we was just kind of working that area, consolidate and drop down into the 923 new week opening gap, back up to the liquidity, back down to the new week opening gap, back up to the liquidity, back down to the new week opening gap. That was the rest of it. That was just it. We just do in that area, right? So like I said, price dropped and then do right there. Okay, let's look at the just the 9:30 to the end of the day on the 1 minute, right? So looking at the 1 minute time frame here, right? Classic nasty high resistance, a whole bunch of manipulation, like liquidity run. Okay, so this is our 9:30 open here. Now I moved it out the way so we can see the candle, right? So we open here at 9:30, right? We open there at 9:30. Here, this is our 9:30 candle. That's our 9:30 candle. Let me see if I can lighten that up a little bit. Put it on 1 pixel. Put it on dots. There you go. Then now you can't even really see it. But anyway, this is our 9:30 candle right there. Okay, we open up and price just dumps, right? We dump down, came all the way down below that 1024 new day opening gap, right? That 1020 new day opening gap. This is our first presentation fair value gap here on the 931 candle, right? Price trades back up to the first presentation, right? And we get an institutional order flow entry drill once, twice, right? Once we hit it, twice we hit it, and then we left it, right? So we had 2 opportunities to get short off of the the first presentation if you trade during this time frame, right? So then we dropped down, right? Created a small fair value gap there on the 938 candle, traded back up into that to just above the high of that new day opening gap from 1024 into that order block from 937. Again, that's an entry possibility if you trade during that time. And then price dumped, right, all the way up into the start of the 950 to 1010 macro. Let's put the macros on so we can see our macro times. 950, 1010, 1050, 1110, 1150, 1210, and then we'll put on the opening range for the afternoon. Okay, so price dropped down to the start of the 950 to 1010 macro. And remember we said price kept dropping until like halfway through, right? So this is the halfway point of that macro right there. And you see on the 1 minute chart, when we got there, we consolidated, pushed up into that 949 fair value gap. Just fell short of the low. The low of that new day that new week opening gap is 20,202.25, and the high on that candle is 20,275, right? So falling short of the low of that new week opening gap. Price dropped down, took out the sell side again, traded back up into this 958 SIBI and the that consequent encroachment of that daily fair value gap. And then notice what do we say about all of these PD arrays when we were on the higher time frame, class participation time. Was there any indication between 8:30 and 9:30 a.m. that price was going to drop after the open? Yes, that's what we was talking. That's why we picked out that's what we did on. How long you been here, Jim Big Bird? Was you here in the beginning when we talked about figuring out where we was at in price, figuring out the drawn liquidity, and then yeah. So we talked about that. Now there was there's never an indication that it's gonna do it this fast, right? Now what you can do, right? What you can do, if you talk about the amount of speed it was, there's never an indication of that. But what you can do to let something like this so that it won't surprise you is how can we class participation time? We sprinting now, baby. We sprinting now. Somebody tell me. I want somebody new to talk. We had Lump talking, we had Tish talking, We had Marco trying to talk. I want somebody else. Somebody else jump in the chat and talk, man. Who in here? Rhonda, you in here? You still in here, Rhonda? Deborah, are you still in here? Pull up. Get in there. Talk to me. Right? If you in the gang, y'all pull up in the chat and talk to me. Now, how we're melting down through there. That's your clue. Right? That's your clue. How we see how we going through there? What can you do so that when price is dropping like that and not really retracing, what prevents that from looking at price? What do you look at in price so that they won't be a surprise when it just does that? You're kind of expecting it, right? Nothing is going to prepare you. Nothing's going to say, oh, today we just going to drop. But what can you look at in price when you can expect that, right? That's your clue right there. You're expecting that. What are you looking at it? Where do we look, first of all? Where do we look when we want to figure out what's going on in price?
Look to the left.
We look to the left, right? Thank you, Rhonda, for pulling up. And when we look, when price is right here at 9:30, remember this counter don't exist yet. Price is right there at 9:30. When we look to the left, what do we see over there that says, hey, it's a possibility that we can get a... What do we see over here? Keep it real simple. Don't go start looking for PD arrays. What do we see over there in price? What do we see?
A balanced price range.
A balanced price range. What lets you know that all of this is a balanced price range? Break it down for me.
Because buy side and sell side was delivered efficiently.
Yes, buy side and sell. It's been efficiently delivered and what? Right? So it was efficiently delivered here, and then price did what?
Left the area.
Left it. It was efficiently delivered here, and then price left the area. It was efficiently delivered here, and then price left the area. So now what do we expect balanced price ranges to be? Either support price, resist price, or what's the third one? Speak, Lord. Speak to me. What's the third one?
Slice straight through?
Slice through it like butter.
Yeah.
So if you see that you're here in price, this is your draw, and you got efficiently delivered price to your left, right? You can anticipate price to cut through it like butter, right? On a non-manipulated day, that would be a low resistance liquidity run when price just moves. And if you look at it in hindsight, right, what does it look like? This looks like a very low resistance liquidity run, right? And in all actuality, this right here is that's a low resistance liquidity run. Right there. That's all and at 9:30, what did price do? It dropped without stopping until it got here. Rip! And what is it cutting through? That efficiently delivered price action. And then Uncle Romy Rome got in there and hit the button. Stop. We got NFP tomorrow. We can't just let this just keep dropping. Stop and hold price right here for the rest of the day. All right. So there's never a way to say this is going to happen right now. But when you look at price, you can anticipate this low resistance liquidity run there because, matter of fact, let me just put a line right here, make it real fat and chunky. So when I go up to the daily time frame, I know where it's at, right? So see where I marked that out at right there? Right? And if we look to the left from there, right? What is that? That's that last balanced price range that we said price consolidated there and left it, right? And when we came back to it, look at that. This day and this day, 2 days we just pushed straight to the downside, right? And then where did we stop at? Right at the bottom of that balanced price range right there. Hard! Stop there. Hold it there. We got NFP tomorrow, right? Using my version of trading, price has been dropping from midnight, building bearish fair value gaps all the way down, practically on the 1 hour. Particularly on the 1 hour. Future view is that we'll move. Future view is that we'll move up tomorrow since we're now in bullish weekly fair value gap, almost at a monthly sell side. But what do I know? I ain't gonna hold you. Shout out Robinson, pulling up with a dissertation. You know my reading don't be reading, man. So you got that Jim Big Bird. You got that. Okay. All right. And it's okay, Jim Big Bird. I think I saw you in the Discord. You can unmute and talk. If it ain't working for you, then you might have to turn your push to talk off if it ain't working for you. Were you trying to talk and just couldn't? All right. Now, where were we? Oh, yeah. What do we want? What do we say? Oh, too noisy. What do we say we wanted these PD arrays to do when we was on the remember we was up here, we said price started. We said price was right here, and what do we say we wanted these PD arrays to do? Somebody refresh my memory. I can't remember that good. We said we wanted price to do what?
Did we
You
say
want the PD arrays to fail and then be used as resistance.
Yep. Fail, be used as resistance. Fail, be used as resistance, right? Okay, that's what we said. Now, let's go over here and go down to the 1 minute time frame again. Right? Squanch this up some. Right here. Right? That right there is on a much larger time frame, so we can't see it. Right, this here, we can't see it on this time frame. We said that we wanted each one of these PD arrays to fail and be used as resistance, right? And if we come here on our 1 minute time frame, all right, starting at 9:30, right, starting at 9:30, we came down, we created our first presentation. We get below what? What is this? This is that first new day opening gap that we formed, right? It failed. And then we used it as resistance, right? This is our first new week opening gap that we have marked out. It failed, and then we used it as resistance, right? Came down again, faked somebody out who was trying to go long because they were like, oh, this the bottom, I'm going long. Bust their head, used it as resistance, right? We came down, and we do all on this other PD array that we had marked out. Right, we're in between two. We're in between this prior week low and this new week opening gap. You see how we just do the doing in between those right there? Just still do the doing, and then we get over here. Right, we get over here. We still do the doing, right? And that's where that's where price ended up. Right, so we're using this one as resistance, and right now this one is still being used as support. Okay, so now, do we reach, if we squanch everything back up and move all the way over here where our initial consolidation was, we got to go up higher time frame. Let's go to 15 minute, because 1 minute don't go that far back, right? This right here was what we marked out as the initial consolidation, right? We got a whole lot going on in there. Okay, and if we look here, we zoom in here, over here on this initial consolidation right there that we marked out as this was the lowest low in this area, right? Right here, this is the one that's being used as support. Right, that's the one that's being used as support, the new week opening gap. Looking at the 15-minute time frame, right, that one is also the last area of imbalances on the 15-minute that have not been traded back to, right, inside this area right there, right? So this is that's the lowest point of the imbalances that had not been traded back to. This one was already traded back to, and we went up, right? So we got this balance price range right here, and this is the highest body in that balance price range right there. We're going to make that blue, right? That's the highest body. That's the highest body in the balance price range right there. We got the balance price range. We left it. This right here is the lowest point of the imbalances that hadn't been traded through in that area, right? And then that's the new week opening gap that we've been using as support thus far. Zooming back over, right, to the end of the day. Look at that right there. I can't make this stuff up, right? We came right down just below that lowest inefficiency on the 15-minute time frame right there on that 4 o'clock candle right there, right? Came down, stopped right there to the lowest low of that inefficiency on the 4 o'clock candle. Now, and that's this right here was the close of the day. We closed the low of that candle on the closing candle. The low of it comes in at 20,925 even, which is one tick above that low. And then we closed at 20,1125. So we closed like 2.25 ticks. 2.25 points above that. And then that's the New York close. And then at 4 o'clock, we opened up, dropped down below those candles there, and then blast off, right? Blast off all the way back up to that prior week low, right? Hit that prior week low, and then traded back down to the low of that new week opening gap, and then, ended off the futures session day right there just above that new week opening gap. All right, so as we, based off of our draw being down there, based off of what we would like to see, what we're predicting price to do, right? And when you know the key levels to put on your chart, right, you can see that price did exactly what we expected. At 9:30, we got down below the new day opening gap, right? Didn't even bother trying to even use it as just push through it. Got below the new week opening gap, traded back up, used it as resistance. Now, here's another thing there. Remember when I just thought about this when I said that. Remember when we be talking about the probability of PD arrays failing, right? This is a new week opening gap. This is a new day opening gap, right? Which one is higher tier? Which one is higher tier? You got a new week opening gap. You got a new day opening gap. Which one is higher tier?
New week.
New week opening gap is higher tier. Okay, we got a 15-minute SIBI here, right? We got a 15-minute SIBI up there, right? So, as you see, when price got down below the new week opening gap, it came back to the higher tier new week opening gap and then went down. If the new week opening gap would have been above the new day opening gap, then you can anticipate it to draw back to the higher tier. But since the higher tier is below the lower tiers, right, you can anticipate this to act as the resistance that you want, especially when you see it melt through and get down below the higher tier. Let's look at it from this way. You got a higher tier below a lower tier, And price, if you looking to buy off this, you got your feelings hurt. Why? Because it melted through it, drawing toward the higher time frame. You see what I'm saying? It drew down toward the higher time frame. And now look at it like this right here. Now we're below this daily wick right here. Okay, we're below the daily wick, consequent encroachment. Okay, get out of here. Get out of here. Get out of here. We're below this daily wick, consequent encroachment, but there's a weekly new week opening gap above it. So now that we're below it, it pushed through the daily wick to get to the new week opening gap. And you say, well, Tim, it came back into a 15 minute. 15 minute is lower than daily. You're right. But what is this 15 minute in line with? It's in line with a weekly PD array. Where did it stop? At the weekly PD array. That's just that right there was just a clear example of what I be talking about when we be talking about like the probability of PD arrays holding or not. And I think that's gonna do it, man. I think that's because again, price just it was a drop and then hold it there, right? And after 10, I didn't see anything that I wanted to trade off of watching the higher time frame, watching the 15 minute and the 1 minute. Looking back in hindsight, this entry into this right there, that was your entry off of this fair value gap there coming into the macro time there. It just was, you had to sit in it a long time, right? It went in your favor, pulled back against you, went in your favor, you know. So here you got picked up, came down, you came back almost red, came down, you came back up, you went red. If you had trailed your stop after this drop, you got taken out in profit over here. If you didn't trail your stop, you went into the red and then you came back, right? And then depending on where your stop was, if you was targeting a new week opening gap this low, or if you were targeting this low down here, then you never made it and you probably took profit at either this low or the new week opening gap, whatever you was targeting. But in hindsight, this was the entry. Watching price print, we had us a drop, then we just started chopping here. This is just chop slop, right? Going into the macro time, you expect to see price spool, right? Remember what I said yesterday. It's spooling somewhere, because imagine on a 1 minute time frame, right? This drop right here, imagine what that looks like on a second chart. Remember what we did the other day when we looked at like a 1 minute candle and we had like 60 candles, and we're like, this is what this looks like on a 1 minute on a 1 second chart, right? And let's come here from there. We'll go there and we're gonna move over 60 bars, right? So that's 60 bars right there. So from here, from the start of this, from this start of the green over to the start of this red or pinkish, whatever that is, right? This is what a 1 minute candle will look like on a 1 second chart, right? This is what a 1 minute candle will look like on a 1 second chart. So this huge move right here, right? That would be on a 1 second chart for one 1 minute candle, right? Just say there's one red candle right here, right? Just say we're just gonna pick this one red candle right there. This one red candle. Well, no, we got to pick a green candle because we open in here and we're closing here. So yeah, we need a red candle. This one red candle right there, this big down close red candle will look like this on a 1 second chart, right? So that's a lot of spooling, and we got a We got we go down. Matter of fact, that'll be my favorite signature on a 1 second chart. We go down, force traders in the right way, come back up above that high, take them out, right? And then go back down, right? And all of that would be in one 1 minute candle on a seconds chart, right? All of that there. So coming here, going down, forcing them out, and then going back down. That right there is 60 candles. Right, so on a 1 second chart, that move right there would be inside one red candle that looks like this right here, like that red candle right there, because we opened like near the top, and then what it'll be have a wick on the top. So just imagine the wick being on top of that right there. Right, get it? Got it? Good. So price is always pricing. Right, price is always pricing. The algorithm is always doing its thing, but it just may be on a time frame that you're not it's not visible to you because you're not watching that time frame. But if we start with the top down analysis, we go into it with like, hey, this is what I want, this is what I expect. Even if it don't give you a setup, like it didn't give me a setup, then we can walk away and say, hey, look, it did exactly what we wanted it to do. Right? Got below it, use that resistance. Below it, use that as resistance, right? And now we're just kind of stuck right here. Now we're at that point where, right, do we keep going down, right? Do we keep going down? Why? Because these are the things that's in between you and the draw, right? That has the potential to send you the other way, right? And now you're down here in a deep, deep discount, right? Since we're in a deep discount, right? And now that we're in this deep discount, right? We're down here in this deep discount below an old low, and we're consolidating, right? So now, if we're down here below an old low and we're consolidating, right? This right here could potentially, right, start us to going back up. Why? Because we're engineering liquidity there, right? So all we would need is some type of displacement to go up, right? Or we can get a quick pop down and then go up, or this could just be another area of redistribution for the market maker sell model, right? But we're at a higher time frame discount PD array in a deep premium. So now we want to let price see what it wants to do. Speaking of, let's go to the day and see have we done anything yet, right? And right now we got a bullish gap up, right? And we're still consolidating. Probably won't do much of nothing until NFP, until after NFP. Right, so but where are we? Right back at that prior day low, right? So we have just been doing the same thing. Gap, low, gap, low, gap, low, right? We've been doing the same thing since when? Since back over here. We got down here to the low, got down to the gap, went back to the low, went back to the gap, went back to the low, went back to the gap. Now we back at the low, right? Remember what I told you? The algorithm don't care nothing about our man-made stops, right? We said, hey, it's time to stop right here, right? But the algorithm was in the middle of what? Its little phase. It went to the gap, went to the low, went to the gap, went to the low, went to the gap, started going to the low. Stop. Time to stop. Algorithm said, golly, man, you messed me up. So when it came back on, boop, it gapped up to the low because it was heading that way. Back to the low, and that's where we are now. Would a better entry have been around 1039? I saw that one because it rated the swing high of the macro, then displaced down. There was also SMT. That would have been fine. We talked about it, gave opportunities over there, I think. It's not the thing of being better. It's the thing of what's your what are you seeing in price? What's your model, if you will? You know what I'm saying? What are the requirements for you to push the button? So if we come over here to, you say 1030, right? Let's find 1030. Right here, this is 1030. Right there. Would a better entry have been around 1030? Okay, this is 1030 right here. A little before 1030. So here on this retracement back up there. All right. So anywhere in this area right here. So anything in this area right here, right? Anything in this area right here, right? Just looking at this on the 1 minute time frame. Let's do this. I'm gonna go here. This is 10. I'm gonna go to 1030 and chop that off and go to 15 minutes. Right. So we got a 15-minute time frame. Right. This is that 15-minute SIBI that we was talking about. Right. Remember we talked about that 15-minute SIBI that was in line with the new week opening gap. That was above the new day opening gap. Okay, so we're gonna go there. We're gonna put that on the chart. That's our 15-minute. Right. We'll look at 5 minute for anybody who watched the 5-minute time frame. Right. We have a 5 minute that we had traded into prior to that. Right. So we had a 5 minute here. Right. So so anybody who don't watch the 15, they only watch the 5. Right. We're gonna make the 5 minute blue. We're going to make the 5 minute blue. All right, for those who watch the 5 minute and don't watch the 15. All right, so now we got a 5 minute SIBI and we got a 15-minute SIBI here. Right, so this is right here is the end. This is when that 1030 candle starts. Right, so this is the area right here that we're looking at. I said that this right here was your entry in hindsight. Now, and the question is, would this have been a better entry? For me, right? For me, looking at what price is doing, I'm going to react. Okay, let me ask this question. Right? When was, right? Make this real big here. Right? Make this big. Right? Can y'all see the times down here on the bottom down? Can y'all see the time stamps for these candles down here on the bottom? Right? Right? What time, right? So this candle right here, right? This candle right here is when this is a 5 minute time frame, right? And then let's go to 15. Let's do this. We want to be truthful and honest. So everything, right? So everything to the right of this dotted line right here is after this 15-minute fair value gap was created. Okay, everything to the right of this dotted line is when the 15-minute was created. Okay. And so everything from this dotted line over to here is when the 15-minute was created. Everything from this dotted line over is when this 5 minute was created. Okay. So if you trade, now let's go to the 1 minute, because we was watching it on the 1 minute. Okay, so if you watch the 5 minute for your structure instead of the 15 minute, right? Then this candle right there is when price came to your entry and you would have been pushing the button. It's not about what I think. It's not about what anybody think. I'm going through and trying to show you this is how you look at what should have happened per your plan, because it's easy for me to say, oh no, I wanted to, it's easy for us to say what we'll do, but when we want to look at it as this is what happened in price. So if you watch the 5 minute PD array, this is when you would have been picked up. If you say I pushed the button, when it come back to this point, this is when I push the button, this is when you would have been picked up right there, right? If you watch the 15 minute, right, this candle right here is when you would have been picked up, because this is at on the close of this candle right here, that 15 minute was created, right? On the close of this candle right here, that 5 minute was created. So now on the 1 minute, when we trade back up into that there, if you go short off that 5 minute, that's when you got picked up, right? If you want something to set up on the 1 minute after it touches your 5 minute PD array, right? This candle right here is when you would have been picked up. Okay? And why do I say that? On the 1 minute, we trade back up into our 5 minute anticipatory reactionary point, which is this fair value gap, right? Price displaced away, taking out the sell side, then it retraded back up into that fair value gap right there. So that candle is when you would have got picked up if you watch the 5 minute and wait for it to set up on the 1 minute. So that's your I enter on the 5 minute. This is I enter after my 1 minute touches my 5 minute and then give me a setup. So that would have been the entry at 9:56 for the 5 minute entry. The 1 minute based off the 5 minute would have been 10:07. Okay. Now the 15 minute, if you enter as soon as it touches the 15 minute, right? The 10:17 candle would have been when you got picked up. And then if you wait for it to touch on the 1 minute and then give you something to trade off of, right? There's a possibility. This is a stretch, but we touch it here, we start to consolidate there, right? And then we drop down and create 1, 2, right? We create 2 inversion fair value gaps, right? So we create 2 inversion fair value gaps right here, right? So when we create them, we created this first inversion fair value gap there, kept running down, right? We created another inversion fair value gap there, and then we traded back up, but we didn't touch either of them. So right here, there's no for me, there's no realistic entry for if I let the 1 minute set up after touching the 15 minute. That's I trade off the 15 minute entry at 10:17, and then all right, still nothing for me. Right now we're getting into 11:50. So talking about this area here, the 5 minute had an entry. The 1 minute setup off of a 5 minute had an entry. Entering straight off the touch of the 15 minute had an entry. And after that, I don't see nothing else. right? I entered on a 2-minute inversion fair value. Okay, right? I don't look at the 2-minute. I don't look at the 2 minutes. So again, there you go. It's all about what time frames you watch. It's all about, you know what I'm saying, what you looking at as far as what you want price to do. Because at the end of the day, any of them in this area here, 1 minute, 2 minute, 5 minute, you know what I'm saying, it's all pretty much same risk to reward, same area, same trade, same, you know what I'm saying, you all looking at the same thing, using the same concepts, right? Right. You say you just went short for the set after the second inversion fair value gap. You just went short. You didn't wait for it to retrace back. You just went short after it made it. Like after it created this right here, you just went short. You didn't wait for it to trade back. After it created that, you just went short. You didn't wait for it to trade, like retrace back up into it. Yeah. And like, shout out Dodgy. That's how Dodgy trade inversion fair value, guys. Once it get created, he just goes short or long. He don't wait for it to retrace back. And then if it close above or below the inversion fair value gap, then he just closed the trade. That's how he trade the inversion fair value gaps. Like he don't wait for the retrace. Yeah. Violating the PS. Okay. All right, man. Anybody else got anything? We done been on here for an hour and a half. Did anybody find this helpful? If y'all found it helpful, hit the like button, man. If y'all found it helpful, share it with a friend. Be like, hey, man, come over here and get this good game. All right, come get this good game, man.
There's somebody on the internet charging $99 a month for this. This stuff really works, man.
Hey, man, this stuff really works, man. It's somebody on Al Gore's internet charging you $99 a month for this, man. Hey, man, that's all I got. I appreciate y'all for hanging out with me. I ain't gonna hold y'all up no more. I'm gonna let y'all go do your trick-or-treating with your families. Text message. What is this here? Bruce, this is Ted Cruz. And I'm in the fight of my life. I'm fighting for my life, man. They got me fighting for my life. If they don't stop texting me, I've been reporting. Stop. Report junk. Stop. Now report junk. All right, man. Okay. Christopher was invited to his friend's house for his day. His friend said we're gonna go to the rich people's house after we leave our neighborhood. Grandy, my son friend. I know y'all probably can't see this. My son friend. Let me see if I could. Y'all know how I get, gang. I'm going to put this in the Discord and then I'll put it up on the screen. My son friend, Discord. I don't want to go to general questions. I want to go to the main chat. Okay. Let me share my screen. My son friend, he got invited to go trick-or-treating with some of his homeboys, right? My wife sent us this. It's a video. I took a screenshot. Now, y'all see this house? Y'all see like the air, like look at this house, right? Look the driveway, the yard, right? They said the friend said, let me read the message my wife sent. Christopher was invited to his friend's house for today. And his friend said, we're going to go to the rich people house after we leave our neighborhood. This is the friend house right here. He said we going to the rich people house after we leave our neighborhood. So my question is, what the rich people house look like? If this the poor people house, if this the people house who say we going to the rich people house. What the rich people house look like? I tell you, boy. Now, I'm just telling you, I'm speaking as a father, right? If that was my house and my child said, we going to the rich people house after we finish here, hard as I work for that house right now, I would be slightly offended. Like, I don't know, like, it don't cost, it's not super expensive to live in Georgia, right? It ain't super expensive to live in Georgia. But a house like that right there in Georgia is easy 2.5. Easy. Just looking at the outside of the house and knowing like how much houses cost around here. Looking at the out, depending on like, and then if it's in a really good neighborhood, it might be like 3.25. But it's easy 2 to 2.5 for a house like that right there in Georgia, right? Easy. And it's not expensive to live here. So you telling me I got you staying in the house over a M.
So you say the house that you showed was the cheap house? Was the poor people house?
He said his friend said we going to the rich people house after we leave our neighborhood.
I hope he's joking. So they got to be going to JC house.
I don't know who house they going to. I'm like, what? We going to the rich people house after this. What? Boy, stop. Boy, stop. And then they and it's that's probably like all their property back there. So they probably sitting on like a couple acres. That's probably all their property that's around it, because it ain't no house. Like, look, like the way she filming, I can't see like no other houses that's like right next to it. You know what I'm saying? The closest house I see is like way on the other side of the building. Anyway, man, I appreciate y'all for hanging out with me. I just want to share that with y'all because I saw that. I say, well, stop playing with me. Y'all enjoy the rest of y'all evening, man. I'll see y'all. I don't see tomorrow. It's a football game tomorrow, but it's 2 hours away, and it is man. I don't know if I want to go to this game. If I go to the game, we won't do no live stream tomorrow night. But if I don't go to the game, we will do a live stream tomorrow night. That's all I got, man. I appreciate y'all. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's been your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Y'all be safe out here in these trading streets, man. Gone.